Hey guys, what is going on? Welcome back to my Robinhood portfolio. What I thought I would do now is talk a little about day trading with regards to being labeled as a pattern day trader. This has come up quite a bit. I've been asked about this on a number of different videos. A number of different comment threads have been started with regards to what exactly is pattern day trading, or how do you get labeled as a pattern day trader. So I thought I would just kind of walk through that, and also in particular point out one of the safety mechanisms within the Robinhood experience here, within the application software, to prevent you from being labeled as a pattern day trader, and why that has some important implications. So pattern day trader is defined by the FINRA, and the FINRA is an acronym for Financial Industry Regulatory Authority. It's essentially a private corporation that acts as a self-regulatory organization for brokerage firms. And it has a number of different rules, but the most important one is that a stock market trader who executes 4 or more day trades in any 5 business day period is labeled as a day trader. And this is for margins account. A lot of you guys within Robinhood probably have Robinhood Instant, which is a form of margins account. Robinhood Gold is the margin account within Robinhood that everybody knows about, but Instant is also considered a margin account because when you put money into the account, rather than having to wait the 4 or 5 business days that it takes to transfer funds, Robinhood essentially gives you a loan. So you're borrowing on margin for that period of time. And also when you sell off stocks, you can immediately reinvest that money, but you don't have to wait for a holding period as well. So if you have Robinhood Instant, if you're able to take advantage of instant deposits, as well as after selling a stock, immediately buying stock, you have an instant account. And if you do, you can only do 3 trades in any 5-day business period, because if you do 4, you're going to be labeled as a pattern day trader. But Robinhood has this nice feature here, you can see in the middle here, that limits you to 3 day trades. I actually have the setting off right here. If I go to day trade settings, I can turn the pattern day trading protection on, as you can see there. And now you can see in that 4th trade, it is blocked now. So I can do 3 in any 5-day period, and then it is blocked. You can see I have 1 day trade already with Ford. I do a lot of day and swing trading with Ford. So if I were to do 2 more of those within any 5-day period, it would lock me out. I wouldn't be able to do any more day trading. But since I have more than $25,000 in my account, you can see there, if you enable pattern day trading protection, we will prevent you from placing a trade that could mark you as a pattern day trader. If you are marked as a pattern day trader, you may not place day trades if your portfolio is less than $25,000 there. And it has a nice little tutorial as well. If you click on that, it explains exactly what a day trade is: purchase and sale of the same stock on the same day. Really, this has to do with when you buy the stock versus when you sell the stock. So if you buy 3 different stocks, like let's say for example you bought 1 share of Ford 3 times and then you did 1 sale, well, that essentially is counted as 3 day trades. So it depends on when you buy the stock. So if you bought 5 shares today, and then you sold 1, then you sold 2, and then you sold 3 more for all 5, that's still only counted as 1 day trade, because it depends on when you buy the stock, if that makes sense. So if you bought 1 stock 3 times and then sold it once, that's 3 day trades. If you bought 1 stock once but then sold it 3 times, that's 1 day trade. So it depends on how many times you buy the stock in any particular day. But it's kind of nice. It kind of goes through these day trades here. Oops, I went a little bit too fast there. Pattern day trading protection, it goes through as well. And essentially, you can see there's a 90-day suspension period. So if you are labeled as a pattern day trader and you don't have $25,000 in your portfolio, then you can't do any day trades. So kind of a cool little protection here for day trade purposes. It prevents you from being labeled as a pattern day trader. If you don't do day trades, it's really not a big deal if you're labeled a pattern day trader, but you can't do any day trades. If you want to get out of a stock after buying it very quickly, you would not be able to do that. So hope that makes sense to you guys, what day trading is with regards to being labeled as a pattern day trader. Again, I think the other question that a lot of people had was, what counts as a day trade? So it depends on when you buy a stock. So if you bought Ford, for example, if you bought 1 share today, bought a 2nd share later in the day, a 3rd share later in the day, and then you sold once, that's 3 day trades there. So if you bought a stock once, and sold once, all 3 at the same time, that's 3 day trades. But if you were to buy 3 stocks and then sell it once for 3 sales, it's still only considered 1 day trade, because it depends on when you buy the stock. I may put a video out about that. A lot of people have questions about that particular aspect of day trading. So I don't want to make this video too long, so I'll kind of end the video here. As always, if you enjoy my videos, feel free to like, share, and subscribe. Hope you guys are learning a ton. I've learned a ton since doing these videos. And until next video, we'll see you then.